Welcome everyone to Best Interest. This is Shane back again for another stock pick of the day video. It is January 17th, 2024. Today we are going to take a look at one out of the material sector, Lyondell Basell. Let's jump right in. And if you are new to the channel or you have just not done so already, go ahead and hit that thumbs up down below if you find value in the content. Hit the subscribe button and ring that notification bell so you're notified whenever we put out any new content. Help us grow the channel by doing those three things: hitting the thumbs up, hitting the subscribe, and ringing that notification bell. It really does help out a small YouTube channel like me to grow and to get the word out. On this channel, we focus on dividend growth investing. So again, hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community. I do stock pick of the day videos like this Monday through Thursday. And drop a comment down below if you have a company you'd like me to walk through a stock pick of the day video. Drop it down below in the comment section and I'll work it in the rotation. And let's jump back into the video. This is the vested interest stock screener. This is how I'll set up the videos. It's also how I run through a company on a high level to see if I'm interested in investing. So that's what we are going to do in this video. And if you want to know more about this company, check them out at www.lyondellbasell.com. That's www.lyondellbasell.com. That is their homepage where I pulled this information from. We are Lyondell Basell, a leader in the global chemical industry, creating solutions for everyday sustainable living through advanced technology and focused investments. We are enabling a circular and low carbon economy. So this is the new buzzword. I'm telling you, low carbon. I just see it all over the place, especially when we're looking at utilities, the energy sector, oil and gas companies, stuff like this. This new buzzword seems to be low carbon. Now, this company has been around for quite a while. Predecessor company scientists Carl Ziegler and Juliana Nada make breakthrough discoveries in the creation of polyethylene, PE, and polypropylene, PP. PE and PP resins are used today to make numerous products, including automobile parts, surgical gowns, children's toys, wind turbines, and water pipes. They were jointly awarded the Nobel Prize in Chemistry in 1963. That's pretty cool. You can actually go back on their homepage and walk through their history over time. This was a couple companies that were brought together and merged together at some point to create Lyondell Basell. That's why it says the predecessor company. This would have been a couple scientists that worked for one of the companies before it was Lyondell Basell. And they deal in chemicals, polymers, excuse me, advanced polymers, fuels. They have their hands in technology. I imagine some of the stuff that they do is helps to make plastics. So you would be in the space that probably does computer chips. They probably sell some of their material to make computer chips. I'm assuming you could, again, go into their website if you're interested, www.lyondellbasell.com, and you may be even able to find some of the other companies that they sell their materials to. Basically a materials company, chemicals, polymers, advanced polymers, fuels, technology. So their hands in quite a few different industries as well. And the reason we are taking a look at them down 1.36%, we are talking about Lyondell Basell Industries, ticker LYB. And complete disclosure on this one, it is one that I own. So not only was it down today, I'm being a little selfish in today's video. I am going to review a company that I own. I don't review a lot of them, but throughout the year, I like to get through my portfolio at least once. So we're starting with Lyondell Basell this year. So far will be the first one, I believe, that I've done in my portfolio. Closed out the day at $92.69, again down 1.36%. We are talking about Lyondell Basell, ticker LYB, out of the materials sector. Closed out the day, or 52-week range, $81.24, a high of $102.05. So they are floating between their 52-week high and 52-week low here at $92.69. Average volume of 1.7 million. Today's was 1.3. Well, it's kind of flat actually, even though they were down 1.3. Looks like a lot of that drop was in the morning, and then they recovered maybe towards the end of the day. Market cap of 30.065 billion, a beta of 1.17. So even though it's pretty flat today, it was overall it's pretty volatile. That's more volatile than the overall market. One being the market, obviously anything under one less volatile. Anything over, like this one at 1.7, being over volatile. PE ratio sitting at $13.26. Not a bad PE on this one. Definitely much lower than the overall market. The average market right now is right around 22 PE for the S&P 500. Earnings per share sitting at $6.99 per share. Nice earnings per share there. Next earnings date is coming up somewhere between February 1st and February 5th. Forward dividend is $5. This is a quarterly payer. We'll see that here in a little bit. Very nice starting dividend yield on this one, 5.32%. Ex-dividend date, November 24th. They paid out December 4th. Kudos to you, other Lyondell Basell investors who received that dividend. And a one-year target estimate, at least according to Yahoo Finance, where I'm pulling this information from, of $101.33. So they see some potential upside on the stock price. Let's jump into statistics, look at dividend yield theory to see if this is presenting any value or not. To do that, you click on statistics, you go down to dividends and splits, you look at their 5-year dividend yield average, 5.12%. You compare it to its current 5.32, or over here where it says forward annual dividend 5.32, same number. And since it is slightly higher than their 5-year average, that speaks to some undervaluation on this one. Payout ratio sitting at 69.81%. It's lower than the 75% that I look for. Now we're going to get into the financials and look at free cash flow. A lot of good information under financials. You're going to find the balance sheet, the income statement, debt to equity ratios, their margins. Are they growing? Is their revenue growing? Are they paying down debt? What are their assets over liabilities? Lots of good information under the financials. Are their margins growing? Just a lot of good information for our purposes. We're going to look at free cash flow. We want growing free cash flow because typically if you have growing free cash flow, you have growing dividends. So 2020, $1.4 billion in free cash flow. 2021, a big jump up to $5.7 billion. 2022, bit of a drop down to $4.2 billion. And then so far here, it doesn't look like they've closed out 2023 yet. They're at $3.5 billion. So a bit of a drop down from 2022. We'll have to wait and see what the final numbers are. But overall, from 2020 to 2022, sitting at $4.2 billion, even at $3.5, they have been growing. They just had this one outlier year where they had a huge jump up overall. Growing company and free cash flow. They are repurchasing their own shares from 4,000 here back in 2020, 463 in 2021. 2021 just like it was a very good year. 2022 still around the 400,000 mark, and so far again in 2023 211. So they have one more quarter to go, it looks like, to report out in 2023 before they close out that year. Now, I always recommend more than one source, so another one that I like is stockanalysis.com. I'm not affiliated with either sites. I just make sure that you are looking at more than one site so that you can back check, and that's why I do it. Back check the information you are getting is accurate and up to date. Sometimes these sites don't up to date as often as others, so I always use more than one source. You pick any sources that you like. Just make sure you're not just blindly trusting one source as the gospel. Now, they have 15 stock analysts that have taken a look at this. They call it a consensus buy, though it is right there on the edge of a hold and buy. Overall, they've got it leaning into a buy with a low estimate of $90. That would be a 2.90% decrease from where it currently sits. I would actually like a little bit more of a pullback than that. We'll see that here in a minute. Average estimate of $101.53. That would be a 9.54% increase. That's also in line with what we saw in Yahoo Finance, the previous page. And a high estimate of $110 would be an 18.68% increase from where it currently sits. All the while, you could collect that 5+% dividend yield that they're showing right now. I'm going to get into statistics here. Look at the financial efficiency of a company. To do that, we look at return on equity and return on invested capital. I like 10% or better for both. Return on equity, this one's sitting at 17.7%. And return on invested capital, 10.14%, both over the 10% I'm looking for. EPS growth is in the negative. I like 5% or better, so this is not good. And revenue growth forecasted to be in the negative as well, negative 4.64%. I don't like that either. So I hope that they improve on both of these numbers, but overall, the rest of the metrics look good on this one. And as I said, I am long Lyondell Basell. I do have 115.824 shares. My cost basis is $87.95. That's why I said I would look for more of a pullback under that 90. I may nibble a little bit if it drops under 90, but really I'd love it to drop back under my cost basis and bring this down a little bit. I don't know that it'll get there, but if it gets close, if it dropped under 90, I might nibble a little bit, run this up to 120, 125 shares over the next month or so, 1 or 2 shares here and there. I am up 5.45% on this one. Payout ratio, this says 71. We saw around the 60% range, 69% range there from Yahoo Finance. We'll call it, 70%, still under the 75% that I look for. Now, this is misleading. The dividend growth, I have in my spreadsheet where I track this one at 5.5% dividend growth because that's what it seems to be on average. You're going to see right here, there's a big outlier here in 2022. They paid a special dividend, which I did receive. Was nice to have, but it's not typical of what they give. But going back to 2020, $1.05. They raised it up in 2021 to $1.13. So that's a typical raise right there, right? Up about 7%. 8% right there. They raised it up 8% there in 2021, June of 2021. Then they had this special dividend in 2022. This is not typical, but it was very nice to receive. Then in August of 2022, they took it from 113 up to 190. Again, that's more typical. That's a 6% raise right there. That's more in line with what they typically do. And then most recently, here in May 2023, they raised it up from $1.19 to $1.25. So another 6%. So really, this dividend growth, if you went based on their 6-cent raise, 6 to 8 cent raise, there will be around the 5 to 6% dividend growth. So still nice dividend growth on this one with a very nice starting dividend yield. I think it's starting to look attractive. I would like it under 90. I would really love it back under 88, 87, 95 my cost basis. If it was to drop back under my cost basis, I would add some, and I may nibble a little bit if this drops under 90. Really like this position. Love the dividend payout. Like I said, only under 75%, still growing at about a 5% clip. So really like that combination. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. It doesn't cost you a thing. Go ahead and do it. Hit that subscribe button, hit that notification bell so you're notified whenever we drop any content. I'm putting out videos like this Monday through Thursday where we're taking a look at a stock that has pulled back on the day and see if it presents any value. If you are interested in that type of content, hit that notification bell so you don't miss any. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, drop in the comments down below if you have a company you'd like me to cover in the Stock Pick of the Day series. I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. A little early on that one. Thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risks you can't manage. Never invest any amount of comfortable losing. Always do your own research. Invest based on your situation, circumstances, and intellectual criteria. Always seek the advice of a certified financial advisor.